on in the silver market right now. I wanted to just hop on here, make a quick video, just to discuss it because there's so many things going on. I know a lot of people got kind of worked up and down about the drop on Friday, and it was big. It was it. I think it wasn't necessarily the largest transfer of wealth, loss of wealth in human history, but it was pretty close. I mean, when you look at the market cap, the market size of silver, and the amount that it fell, and then you throw in gold, obviously, and other precious metals, it was a big day, and not in a good way. But let's discuss about what could be good about it, right? So I know a lot of times when an asset, stocks, bonds, mutual funds, whatever, when they rise really fast, and this was fast, you tend to get sort of bummed. You think, gosh, if only I'd seen that coming. If only I had an opportunity to get some. If only I'd have known that this was going to happen. I would have jumped in, right? I think everybody has that. It's not exactly FOMO, but sadness from missing out. Maybe I don't know what you would call it, but and so this presents an interesting opportunity because, yeah, sure. By the time it hit $100, and then beyond that, yeah, it was probably too late. And actually, the first video I ever made on this channel, I said that. I said once it hits 100, above 100, turn the buy switch off is what I said. Leave the sell switch on, but turn the buy switch off. And that's what I recommended. I stand by that. I didn't buy any above 100. I had people talking to me about it, asking me about it. I said, if you want a dollar cost average your way in, sure, go for it. Pick up a couple of ounces here or there, especially if you can find a good deal on it. Yeah, but I wouldn't take a gigantic position above $100, and I stand by that. It turns out it was the right call. And what I think is interesting about this opportunity is it sunk all the way down. I think it bottomed around 72 overnight. I don't know that you could actually have traded that here in the U.S., but that's what it did, and it's sitting around 80 now, and that's an opportunity, right? I mean, usually you watch something maybe kind of slowly slide down, and you think to yourself, well, is now a good buy? Was 110 a good option? Was 100 a good option? Was 90 a good place to be? You almost couldn't blink and have to deal with any of those decisions. It happened so fast, and here we are, $80, and it seems to have kind of smoothed out. But let's look at the bright side. Maybe it's an opportunity to pick some up. If you want to take a big shot at it, go for it. I wouldn't hate on you for that. If you want to just pick up a few coins, sounds like a great idea as well. Nothing to stop you. So this is an opportunity that honestly it doesn't really present itself all that often with this type of speed, not only with which it went up, but then with which it came down as well. And maybe it'll sit here for a day or two. Maybe it'll sit here for a week or two. I have no idea. This very well may not be the bottom. Also, 75-ish was about half, giving back about half of the gains. So that was kind of an important number, and it's settled, above that. I'm not a huge chart person, but that was, a 50% retracement was $75. So we're still above that. So that's good. So that doesn't mean that the absolute floor is 75, but it's a decent indication that might be, the floor for now. So if you regretted not getting in on the way up, you're like, wow, this happened so fast. By the time you even knew what was going on, it was already over $100. I would not have any regrets of not buying on the way up. Again, in fact, in my very first video I made, I said at 100, I'm turning the buy switch off. But guess what? Now it's 80. So turn the buy switch back on. That's up to you. But it certainly is a lot more appealing now than it was, Friday morning. I think it was 120 at that point. So there's definitely a silver lining to this. Another thing that happened, this is not really getting a lot of play, but there was some new rules put in over this weekend that are going to raise the margin requirements. And are they doing this to truly help investors, to truly help the market? Probably not. Let's not give them more credit than they need. But what it is going to do is it's going to slow down. It's going to, sort of put the brakes on some of this action that we're seeing. And that probably is a good thing. It's going to make the rise slower, and it's going to make the fall slower too, because if you're taking any sort of a position, electronically or on paper, you're going to have to come to the table with more. You can't just lever up to the moon like they were. And that's a big part of what caused all this drama over the last few months, both on the upside and the downside, is the paper, because the physical market, it doesn't move that fast. There's no way they're going to shovel, millions of ounces onto a boat and send it somewhere. I mean, it doesn't make sense. This was almost exclusively a paper trade. Which brings me to another point. That's why you see a big difference in the price between the COMEX here in New York, you know, domestically, and then the prices you're seeing overseas. Because overseas, they primarily deal with physical silver. They put it in actual physical products. We've discussed this over time. And so the price of that is not as susceptible to all these swings that we see over here because of our paper market. Um, I'm not a big advocate of getting into the paper game because it's so violent. I mean, unless you have studied it for years, you have some sort of insider information, you really, really, really know what you're doing, or just have nerves of steel, the paper market is a scary place to be. It's you know, a stock on steroids, which is really unique to commodities because it's one of the only things I can think of where you do see an actual physical ownership aspect of it with the physical side, whether it's avocados, silver, steel, um, you know, all sorts of different commodities, corn, but there's also a trading aspect of it too. So it's very unique in that scenario. And to be honest with you, it's at least as dangerous, probably more dangerous because of that, because you're dealing with real world consequences. If eggs, you know, go up 5x, I think we saw earlier last year, that there's real world consequences to that. It's a little bit different than if you're just trading a stock, right? You're just looking at a screen. And so that's really, really interesting. So I'm honestly kind of happy that they're raising these margin requirements. It's going to create a roller coaster in the meantime. There's no doubt about that. We're seeing that. But I think over the long run, it is going to smooth things out. And just another thing to realize, even though you're probably dealing with physical silver yourself, most likely, you know, you're probably dealing with coins and bars and stuff like that, there is still a huge influence on the price of that based on what goes on in the paper market. And here's the reality you need to come to. There's nothing you can do about that. You can complain about it, you can whine about it, you can throw your hands in there and say, this isn't fair. Why do they have to do this? I don't understand. You know, it's so cruel. The banks, and yes, got it. We're on the same page. I agree. But guess what? There's nothing you can do about it. So take that pill, swallow it down, and move on. There's no legislation in the pipeline. There's nothing that's going to change all that. Any changes that are made at the COMEX, SEC, any of that kind of stuff, it's all going to be to benefit the biggest players. They have so much more power than you or I or anybody else does. They have so much more information. They have so much more capital to deal with. So any changes that are made ultimately are going to be made to benefit them. So please understand that. You know, trade at your own risk, especially if you're dealing with the paper side. If you're dealing with the physical side, something I made a video yesterday, remind yourself, you didn't lose anything. You've still got the metal. You know, if you manage to sell some at the top, great. And you can go buy it back now at a discount. That's wonderful. And that's the way I'm looking at this. Basically, the precious metals right now are on sale. Like, go hit the clearance rack at whatever you have in your town. We have Marshalls and you know, TJ Maxx and stuff like that here. I'm in Houston here. Go hit the clearance rack. That's where it's at right now. Does that mean it's not gonna go lower? That absolutely does not mean that. It very well could. In my very first video, again, I said we haven't seen the 70s for the last time. We probably haven't seen the 60s. We might not have seen the 50s for the last time. It's a wild market, and it's so unique because, again, it crosses a bridge between the physical metal that you can hold in your hand and paper contracts that are generally never taken ownership of. Now, JP Morgan Chase did take ownership. They decided to take ownership of 633 contracts, which is a big part of what happened. They did it at $78 and some change. Magically, they just, you know, sort of knew the bottom was in, and that's when they decided to sign that deal. So I did the math. They saved themselves, I think it was $133 million by deciding to take ownership of that contract at the time they did versus having done it the very same morning, Friday morning. I'm not accusing them of anything. I doubt that they broke any, you know, stated laws. They might have. Was there some spoofing? Probably. Did they enter into some contracts that helped drive the price down? Probably. Did they purposefully liquidate some positions on the way down? Yeah, that's what they do. They've got the power. They've got the money. They know how to do that type of stuff. And you don't. So just realize that you're always at a disadvantage when it comes to particularly the paper side of things. But if you're on the physical side, you still own the silver. You still own it. It's still yours. So, you know, keep that in mind. Another thing I want to touch on is the Fed chair, the Welsh is his name. Here's the thing: for the silver and gold market, his nomination is honestly probably not a great thing. But for the world, for the country, it probably is a good thing. And the reason that is he's going to slow down the printing machines. He's going to slow down the money printing. And a lot of the increase in the value of the silver is based on the fact that there's going to be more dollars created chasing the same amount of resources. So it's going to take more dollars to purchase the same resources. It's very simple. It's economics 101. And that's a big part of what we were seeing driving up the price. So now that we've seen him nominated and he's supposedly going to slow that down, that's for the country, that's probably a good thing, right? We've already got an enormous debt that we probably can never pay back. So even if you're thinking, well, yeah, but I've got 100 ounces of silver, I've got 1,000 ounces of silver, I've got however much I've got, I really wanted to see it increase in value. Sure. But even if silver, let's say it holds steady, but the value of the dollar itself holds steady as well, again, you've lost nothing. But let's say that the value of your dollars decreases, and that's what's precipitating the increase in the value of the silver. You've also, in real terms, not gained anything. So for the world, particularly for the country, it would be better to slow down the money printing and allow silver to cool off. And that way, the value of everything, let's say the price of everything, continues to cool off as well. It doesn't really do you a whole lot of good to have your silver or whatever, precious metals or whatever the assets you have go up in value if the only reason they're increasing in value is simply because the dollars are worth less. It feels like a win, and it's a win compared to holding on to dollars when that happens. But at the end of the day, it's really not a win. And there's a ton of people, I don't know what the number is, 95% plus of people don't own any precious metals. So, your victory might have been in many ways their loss, but if now you don't win, but they do win, overall that's still a good thing. So keep that in mind. Would we have loved to see silver just blast through $150, $200? That would have been exciting. I would have loved that. I would have thought it was super cool. But guess what? It didn't happen. I'm not saying it won't, but it didn't. And again, exercise caution. My first couple of videos were me discussing this, like the speed with which the value of silver and gold increased was worrisome. That's not really what you want to see as an investor. Unless you're a trader and you're trying to take advantage of short-term swings, great, yeah, that is what you want to see. But if you're more of a long-term, a holder, you're trying to maintain the value of your assets. When they go up, great, that's awesome. But you really don't want to see them spike like that unless you magically get out at just the right time. And the reason being, when they do spike like that, it's like a spring. And when there's enough energy held into that spring, when that energy releases, it's going to be something big. And that's what we saw. If it hadn't, tripled over the last year, it wouldn't have also wiped out almost half the gains, almost, in a day. If that tripling had taken 3 years, the drop that we saw on Friday would have been virtually impossible. So keep that in mind as well, guys. Nothing to worry about. The fundamentals behind why silver is increasing in value, the majority of them, I won't say all of them, are still in place. We still have a supply deficit. There's still huge industrial demand, and that's only going to continue to go up. Will the dollar value loss slow down? I hope so. Even if that is at the expense of the value of silver increase slowing down. That's fine. I'm willing to make that trade. And ultimately, I think everybody should be willing to make that trade. I would rather the dollar maintain its value and silver increase in value because there's more demand for it than I would rather, how do I say this? I would rather that be the scenario than silver be increasing in value simply because dollars are worth less, right? That's not really a win, even when it feels like one. Hopefully that covers everything, guys. Keep an eye on it. It's probably going to be a pretty wild ride here in the short term as we see, the powerful forces that want the value of precious metals to increase. And then you, on the other side of that, you have the very, very, very powerful forces that don't want to see the value of silver increase. And it's a tug of war, and that's what we're seeing. And those that want to see the price low just landed a haymaker the other day, but you survived. you stood back up, and here we are. We're still up 20%. January was still up 20%, even after what happened at the end of last week. So keep that in mind. Don't lose heart. Don't lose hope. Stay optimistic. This isn't very optimistic, what I'm about to say, but there's a lot of other things to worry about in the economy that are going to have a much bigger influence on you in the long term, much more so than a short-term swing in the value of silver. Something I'm going to cover. Leave me a comment if you think this is going to be interesting. But we're seeing the population of a lot of countries, a lot of first world countries decreasing. So now we've got more people dying than being born in many of the first world nations. America, according to what I've read and the math I'm doing, is going to see that in about 5 years. Germany saw it 50 years ago. At some point, you get to a place where that will never reverse. And that trend is quite scary. And then you have a backdrop of AI. And I can't wait to do a little bit of research and dive into this and make a few videos, because that's going to be a fascinating sort of tug of war. An aging population and brain power, electronic brain power that can take away a lot of the tasks that generally are done by young people. It's going to be fascinating. I'm excited to sort of see how it plays out. I'm also quite nervous because it could go haywire. It could turn out to be a very slippery slope, and we're on it, and there's probably no way off of it. We're not putting the AI genie back in the bottle. Nobody is, and it's going to have massive impact on the economy. And I hope that you're thinking about how you can best prepare yourself, your family for that, because it's coming, and there's nothing you or I can do to stop it. So enjoy the rest of your day. Buckle up, because it's going to be a bumpy ride, and I hope that it's a bumpy ride that's fun and exciting. Bye.